Hello and welcome to the Convergent video series for the week of September 28th. Top three things we're going to cover on the video today. First, the market's down for the fourth straight week. Two, we're going to talk about economic data focusing on unemployment. And three, we're going to talk about the US dollar and its correlation with the other major asset classes in the United States. But before we jump into the data for the week, I hope you all had a great weekend. It was another great weekend here in the Pacific Northwest, and the NFL back with the Seahawks winning a big game against Dallas. And really blessed to have a creative 9-year-old. And a couple weeks ago, as we were preparing for Sunday Night Football with the Patriots, she was talking with me and my wife and said, I want to build a snackadium. And at first, I didn't really understand what she was saying. And as she said it again, I want to build a snackadium, I was like, oh, what? And then I started to get it. You know, she wanted to build a miniature replica stadium, in this case, the Seahawks stadium, where the stands and the field are trays for food. And so it was really neat to watch her spend that weekend putting it together, grabbing old food containers that would have just gone into the garbage or recycling, and put together this really neat snackadium that you all see on the screen now. So I was really, really proud to watch her work so hard throughout the weekend. I'm sure there'll be some upgrades throughout the season, or a new try on a new snackadium. So yeah, just really excited to see what's to come with that. But let's jump into the data for the week. So the market was down about 0.7% on the S&P for the week this week, but it really, was really volatile, whipsawed all over the place throughout the week. And just showing a lot of signs of this continued volatility that we've been expecting. But it really, on Friday, had a really positive move at the very end of the week and almost got all the way back to break even as we wrapped up the week. On to economic data on the unemployment front. New claims for unemployment came in at about 870,000, and new pandemic claims came in at about 630,000. So still combined over about 1.5 million in new claims for unemployment last week. Continuing claims held steady at 12.5 million. And the only positive news that really came out of this is total claims came in about 3 million lower than it was last week, about 26 million. But all of that pretty much came from the lowering of pandemic claims. And so still not a lot of optimism in those numbers, as we've basically seen unemployment hold steady rather than really have any sort of meaningful improvement in the last couple of months. So on to the US dollar. This has been an interesting one to watch over the last 3 to 6 months, as we've seen a really strong negative correlation with the value of the US dollar and the other major asset classes in the United States, particularly the US stock market, the commodities market, and the precious metals market. And so what that means when there's a strong negative correlation is that when the value of the US dollar goes up, the value of those other asset classes typically goes down. And when the value of the US dollar goes down, the value of those other asset classes typically go up. And so when we look back to March, as the crisis hit with the pandemic, and the US dollar basically shot up in value, and all of those major asset classes went down, at least initially. But then through the last 6 months or so, the dollar has steadily creeped down in value, and all of those other asset classes have gone up. And so why that matters is if we look at the last 4 weeks, as we've seen this recent drop in the stock market, as well as precious metals and commodities, the US dollar has actually started to go back up a little bit in value. So that's something that we're going to need to keep an eye on. It's, correlation is not causation. So, one doesn't necessarily mean the other will happen, and these things kind of shift over time, but it's definitely something we're going to have to keep an eye on. So bottom line for the week, with a contentious election likely, just a month away or so at this point, and US dollar going up in value, potential stimulus package out there, which could be a positive for the market, but the Fed also saying they're willing to let inflation run hot. There's lots of things going on which could have various impacts on the market. So at this point, we're still remaining pretty defensive until we get a better sense for where this economy is going. We're kind of at a tipping point right now where the next quarter we might see the economy kind of continue on this very stagnant, low growth mode, or it could, unfortunately, depending on the economic data, tip into kind of a negative growth mode again. And so that's going to have a major impact on where we go from here. So something we're going to keep an eye on. But as always, if you have any individual questions on your situation, please feel free to reach out. With that, we hope you have a great week, and we'll look forward to talking with you soon.